Finance Minister Tito Mboweni is set to deliver a special emergency budget tomorrow. Before the nationwide lockdown, the country was already facing a creeping GDP growth, extreme unemployment, ratings downgrades, along with many other economic challenges. And with the economy being shut down for almost a month, now slowly opening up again, a steep decline is forecast with the loss of millions of jobs. One of the biggest challenges the Finance Minister will have to address is income and revenue collection of tax. To help us unpack what's expected, we're joined via Skype by Muneer Hassan. He is a member of the CA National Tax Committee and a taxation senior lecturer at the University of Johannesburg. Muneer, thank you so much for your time. It's the big question everyone wants to know is where's the money going to come from? Because the expenditure list is long, isn't it?
It is. That's a big question to unpack, but let's have a look at it. Let's just ask ourselves broadly, so where does the money normally come from? And then we can unpack in terms of where I think the money will come from ultimately. So generally, the money comes from three major sources. The first is basically income tax in the form of personal income tax that me and you pay as salaries individuals. And then secondly, when we go and spend, we basically pay value-added tax. That's the second biggest contributor. And then the third only is the companies that come in. What has then COVID-19 done to SARS revenue collections? Well, it has had already a massive impact on the collection target itself. SARS have indicated that up to 370 billion will not be collected this year as a result of COVID-19. And that, just to put it in context, is almost the entire VAT collections. That's your second biggest contributor to the fiscal pot itself. Now, where's the money going to come from? I don't actually think it's going to come from revenue itself. What I think it's going to come from is rather a look at how we budget going forward. And I think in this regard, if you basically think about it, when the minister stood up and he delivered his February address itself, we were in the same old customized way of budgeting, where we basically looked at last year's expenditure and we added a bit of inflation on top of that. But what has changed since then is that we've got the advent of COVID-19, and that has disrupted the entire strategy of the country, if you want to call it. And because of that, we have to redo a budget tomorrow. And the minister has correctly already said he's going to look at what we call a zero-based budgeting. And like the name suggests itself, what it basically says is we're going to go back to the drawing board. We're not going to look at last year's budgets at all. We're going to start from scratch itself. And what does that mean? That simply means, yes, we're still going to have a budget expenditure on education, healthcare, and yes, ESCOM will also be there. But one is to then ask tough questions, and that is, do we actually need, for example, SAA? So is it in line with our strategic budgeted expenditure? Every expenses that we're going to now put on the table, we need to ensure that it is aligned 100% with the strategy. So I think actually that we're going to actually look at curbing expenditure rather than actually increasing the revenue.
What about debt levels? Because we know the minister himself has alluded to the fact that we could reach 100% debt to GDP ratio. You talk about the massive tax revenue shortfall that existed before lockdown as well. So what about our debt levels? We've gone to the New Development Bank. We could possibly be approaching the IMF. What does that mean for the average South African?
It's a big problem, and it's something that we must watch very closely. When we look at the income statement, broadly, we basically have a revenue. We then reduce that by expenditure. And before we actually went into this year's or tomorrow's budgeting already, we had what we call a budget deficit. And that's worrying because with loans comes interest and the ability then to manage that, because if your interest rates become uncontrollably high, what happens, it becomes very difficult to get that negative growth rate from a negative point of view back into positivity. And I think we must keep a very close eye on the budget deficit tomorrow in particular to ensure that that doesn't get out of hand, because that will have a huge impact not only for South Africa as a whole, but for our future youth as well. We don't want to give them a country that is indebted to an excessive amount of debt.
We're also looking at unemployment figures. 30.1% was announced today, projected to reach 50%. In terms of the relief that's needed, and we've seen a massive extension of the social relief grants, what does that mean for the bottom line?
So on the positive side, and the good news is SARS has, and the minister announced that we have what we call tax relief that has come in the form of various shapes and forms, and that got announced already when the president stood up and he said we're going to actually inject some form of tax relief into the system and to actually help companies out over there. We've seen that about 70 billion in tax revenue will actually be lost as a result of this tax relief. And that is where the country as a whole is focusing on strategic spend. And one of the tax relief on the positive side for companies
Muneer, I'm
is
sorry,
that
we have run out of time, unfortunately. I hate to interrupt, but Muneer Hassan, thank you so much for your time at Taxation, Senior Lecturer, of course, at the University of Johannesburg.